Hello and welcome to the World News on SOUQ News Television, live from our studios in Lagos. I am Omobola Sandra. First, the headlines. Federal government appeals to foreign oil firms as output declines deepens, stock market soars as Nigeria adds 1.78 naira trillion in value. Ghana raises farmer pay by 63% as global prices soar. Russia slams Trump's tariff threat on India as illegal. Coercive Europe's power plant set for AI-driven digital makeover. Federal government appeals to foreign oil firms as output declines deepen. The federal government has made a formal appeal to foreign oil contractors and international oil companies, IOCs, to return to Nigeria's oil fields, assuring them of a more secure and stable operating environment. This plea comes amidst declining crude oil output and revenue shortfalls, which have heavily impacted the nation's economy. According to top officials from the Ministry of Petroleum, the government is committed to addressing long-standing security concerns, contractual disputes, and policy uncertainties that previously drove many operators away. Nigeria, Africa's largest oil producer, has faced significant challenges in recent years, including oil theft, pipeline vandalism, and regulatory inconsistencies. These issues have led to an exodus of critical foreign investment from the sector. The current administration is now rolling out a series of reforms under the Petroleum Industry Act to restore investor confidence and boost production. The appeal signals a new wave of diplomacy aimed at reviving Nigeria's oil sector and meeting both domestic needs and international commitments. Markets react to OPEC hike. Global oil prices fell on Tuesday as OPEC and its allies, known as OPEC Plus, announced an output increase of 547,000 barrels per day for September, ending their latest supply cut ahead of schedule. This move has heightened concerns about oversupply in the face of weakening demand, especially as economic signals from China and the United States point to a possible slowdown. Brent crude dropped 1% to $68.06 per barrel, while U.S. West Texas Intermediate fell 1.2% to $65.50, both continuing a four-day decline. Meanwhile, investors worry over President Donald Trump's renewed tariff threats on India for its Russian oil imports had limited impact, with traders largely discontinuing the risk of actual supply disruption. Stock market soars as Nigeria adds 1.78 trillion naira in value. Nigeria's equity market witnessed a remarkable boost, gaining a total of 1.78 trillion naira in value amid renewed investor confidence and positive market sentiment. The bullish trend, which spanned several trading sessions, was driven by strong performance in key sectors, including banking, consumer goods, and industrials. Blue-chip stocks attracted significant buy interest, with investors reacting to improved corporate earnings, stable macroeconomic indicators, and the anticipation of policy clarity from fiscal authorities. Market analysts suggest that local institutional investors play a significant role in sustaining the rally, while foreign investors are beginning to show renewed interest following signals of policy stability. The Nigerian Exchange All Share Index rose significantly during the period, reflecting increased trading volumes and higher capital inflows. With this momentum, stakeholders remain optimistic about sustained market growth, provided economic policies continue to support investor-friendly reforms. State discos clash over tariff hike. Electricity consumers in several parts of Nigeria are beginning to experience widespread power cuts as tensions rise between state governments and electricity distribution companies, discos, over the recent tariff increase. The conflict stems from disagreements on the multi-year tariff order, MYTO, approved by the Nigerian Electricity Regulatory Commission, NERC, which many states have rejected, citing its impact on already burdened citizens. Some states have threatened to take legal action, while others are exploring independent power solutions to break free from the grip of discos. In response, some discos have reportedly reduced supply to certain regions, triggering blackouts. The standoff has heightened calls for a decentralized electricity market and greater transparency in tariff computation as negotiations stall. Millions of Nigerians are caught in the middle, left to deal with erratic supply and rising costs, raising concerns about the future of electricity reform in the country. Nasarawa government to toll Kwandare-Garaku Road. The Nasarawa state government has announced plans to begin tolling the 65-kilometer Kwandare-Garaku Road, an important route linking the state capital, Lafia, to Kefi. The tolling system is set to take effect from Tuesday, August 5th, 2025. This move is part of the state's broader strategy to boost internally generated revenue while ensuring the maintenance and long-term sustainability of key infrastructure. According to the state government, proceeds from the toll will be reinvested into road upkeep and future development, thereby improving transportation, supporting trade, and enhancing mobility for residents and businesses alike. Officials say the initiative aligns with efforts to create a self-sustaining fiscal model and reduce dependency on federal allocations. The Kwandare-Garaku Road plays a crucial role in the movement of people and goods across the state and beyond, making its functionality vital for economic growth. The government has urged residents and motorists to cooperate with the new tolling policy, stressing that it is in the best interest of the state's progress. Ghana raises farmer pay by 63% as global prices soar. The Ghanaian government has announced a significant 63% increase in the price of cocoa paid to farmers, in a move aimed at supporting local producers and boosting morale in the agricultural sector. The new farm gate price rises from 28,928 Ghana cedis to 33,120 Ghana cedis per ton. Effective immediately, this development comes as global cocoa prices hit historic highs due to poor harvest in West Africa, Ghana, and Ivory Coast especially. President Nana Akufo-Addo's administration says the increase reflects its commitment to improving the livelihoods of cocoa farmers who have long been affected by low earnings despite contributing massively to the economy. The Ghana Cocoa Board noted that the price adjustment was made possible by strong market performance and government negotiations with stakeholders. Farmers have welcomed the move, calling it a long overdue correction. Experts believe the hike could encourage more investment in cocoa farming, although concerns remain about inflation and input costs. This is the world news on SOUQ News Television. We'll be right back after this break.
Welcome to Femi Walsh Limited, owners of SOUQ TV Lagos, Our Radio Lagos, Kaswa Radio Kano, and of course, Emirates TV Abuja and Dubai. Our niche market for media is business, economy, and development. At Femi Walsh, we promote your company's products and services using our world-class facilities. From Our Radio to SOUQ TV, what you get is nothing but the best of the very best.
And if you're looking for the premium production firm for your events and corporate coverage, think no further, because we offer you the best of industry standards.
With high-definition cameras ranging from 4K to 8K multicam setups, high-directional microphones, and real-time streaming encoders, we give you a production like none other. And if you're looking to produce podcasts, adverts, and documentaries, our team of experts will ensure that you convey your message clearly and professionally. Femi Walsh, Global Vision, Local Impact. On the 19th of August 2025, Paris will come alive with the prestigious People's Choice Governors Awards taking place at the Gauche Hotel, Paris. The prestigious People's Choice Governors Awards is designed to celebrate governors who have contributed immensely to their states in different countries across the world. If you are a governor who's gone above and beyond to deliver transformative projects in your state and country, then this award is for you. To partake of the Governor's Excellence Awards this year taking place in Paris, all you have to do is send an email to soupnexus.com with the words, "I accept," and we will get right back to you. You can also send a WhatsApp message to the WhatsApp number scrolling on your screens right now. You don't want to miss Paris for anything, and we are looking forward to celebrating you and your achievements this year. So contact SOUQ Nexus to make that happen.
At the Africa Development Studies Center, ADSC, we are committed to driving sustainable growth and development across Africa through innovative training and research. Our mission: empowering leaders, policymakers, and professionals with the tools they need to create lasting change. With customized training, dynamic research programs, and study exchanges on leadership, management, and other critical development topics, ADSC offers a platform for exchanging cutting-edge ideas and global best practices. We provide comprehensive services in research and consultancy, capacity building and training, education programs, publishing, and knowledge sharing. Our esteemed faculty, composed of seasoned experts and researchers, ensures a learning experience that is insightful and practical. We specialize in policy development, implementation strategies, monitoring, and evaluation. At ADSC, learning is engaging and enjoyable. Our unique methodology includes talks, interactive exercises, games, video screenings, and lively seminar discussions, all in a comfortable and friendly environment. Ready to make an impact? For more information, email us at info@adstudycenter.com or call +234 912 039 2362. Visit us today at www.adstudycenter.com to explore our programs and upcoming events. Africa Development Studies Center, rethinking development for Africa.
Welcome back, and now still on the world news on SOUQ News Television. Rwanda has reached a landmark agreement with the United Nations to take in up to 250 migrants as part of ongoing efforts to manage global migration challenges. The deal, which was finalized this week, reflects Rwanda's growing role as a strategic partner in international migration cooperation and humanitarian response. According to officials, the migrants, who are primarily from Latin America and other high migration zones, will be relocated to Rwanda under a humanitarian framework supported by the U.S. government. While details of the arrangement remain limited, it is believed the program will include provisions for housing, integration support, and long-term resettlement opportunities. Rwanda, which has previously signed similar deals with the UK and Israel, has positioned itself as a willing host in the global effort to ease pressure on countries facing surges in migrant arrivals. The deal is expected to attract both praise and criticism, especially from rights groups concerned about transparency and long-term welfare of the migrants. The government of Guinea has officially revoked the mining concession previously granted to Emirates Global Aluminium, EGA, one of the world's largest aluminium producers. The decision, announced on Monday, follows a series of unresolved disputes between the West African nation and the UAE-based company over compliance with investment commitments and local development obligations. According to Guinea's Minister of Mines, the move was made after thorough review and repeated warnings to EGA regarding its failure to meet contractual terms under the concession agreement, particularly in areas related to refining, infrastructure development, and benefit to host communities. The revoked concession affects operations in the mineral-rich Boka region, which has become a hot spot for international bauxite mining. EGA, through its subsidiary Guinea Alumina Corporation, GAC, had been operating one of the country's major bauxite export projects. The company has not yet issued a formal response. Industry observers say the revocation may have significant implications for foreign investments in Guinea's mining sector, potentially shaking investor confidence amid increasing government scrutiny of legacy contracts. And now Kuwait has announced the easing of key visa requirements. The Gulf nation has officially scrapped the long-standing rule that required expatriates to hold a graduate degree to be eligible for a work visa. Additionally, the government has extended the duration of stay for various visa categories, operating greater flexibility for professionals, workers, and visitors alike. The move is part of Kuwait's broader effort to revamp its labor policies and compete with other Gulf nations for skilled and semi-skilled workers. By removing the educational barrier, the country hopes to open up opportunities for a wider range of applicants, particularly in technical and vocational fields. The extended stay provisions are expected to benefit both employees and employers, making Kuwait a more attractive destination for international talent. Immigration officials confirmed that the changes will take effect immediately, with updated guidelines to be released soon. Thailand has approved a stimulus package worth 18.5 billion baht, equivalent to $572 million, aimed at strengthening economic competitiveness and easing the impact of newly imposed United States tariffs. The government announced that part of the funding will support student loans and other domestic relief measures, while an additional 25 billion baht remains available for future tariff-related responses. The move follows a recent decision by the United States to implement a 19% tariff on Thai goods, prompting urgent fiscal intervention from Bangkok. Alongside economic measures, the Thai cabinet has approved compensation payments for victims of last month's deadly border clash with Cambodia. Families of deceased government officials will receive 10 million baht each, while injured personnel will get up to 1 million baht. Civilian families affected by the violence will be compensated with 8 million baht, and injured civilians will receive up to 800,000 baht. The dual response package reflects the government's attempt to stabilize the domestic economy and restore public confidence following geopolitical tensions and international trade pressures. We'll take a short break. When we come back, we'll take the rest of the news.
Welcome to the Africa Development Studies Center, ADSC. ADSC is an organization focused on training and research to advance sustainable development and growth in Africa. We exist to facilitate customized training, research, and study exchanges worldwide on leadership, management, and critical development issues. The center offers a platform for the exchange of ideas and best practices. Our comprehensive services encompass research, consultancy, capacity building, training, and education programs, as well as publishing and disseminating development-related knowledge. Our faculty consists of experts and researchers with extensive experience in policy formulation, implementation techniques, and monitoring and evaluation. Our methodology involves talks, individual and group exercises, games, video screenings, and discussion seminar sessions in a cozy atmosphere, making learning enjoyable for our participants. For more information, email us at info@adstudiescenter.com or call +234 912 039 2362. Visit our website at www.adstudiecenter.com to learn more about our programs and upcoming events. Africa Development Studies Center, rethinking development for Africa.
Russia has disapproved United States President Donald Trump's renewed threat to impose tariffs on India over its continued imports of Russian oil, calling the pressure illegal and coercive. Kremlin spokesperson Dmitry Peskov said Tuesday that such threats undermine the sovereignty of nations and violate international trade norms. Moscow maintains that each country has the right to determine its trade partners without external interference. Trump stated that new sanctions will be enforced on Russia and its trading partners unless Moscow halts its war in Ukraine. However, Russian President Vladimir Putin has shown no signs of shifting course. India, a key Russian energy customer, described Trump's tariff ultimatum as unjustified and affirmed it will continue purchasing Russian oil, even as the standoff intensifies global trade tensions. The United Kingdom is set to begin returning some migrants to France within days, following the implementation of a new bilateral agreement aimed at curbing illegal channel crossings. The deal, finalized after months of negotiation between both governments, marks a significant step in their joint effort to tackle irregular migration and dismantle smuggling networks. Under the agreement, migrants who arrive in the UK through unauthorized routes and meet specific criteria will be eligible for return to France. The UK government says this measure is designed to reinforce legal pathways for asylum and discourage dangerous journeys across the English Channel. French authorities have also committed to tightening border surveillance and increasing joint patrols. British officials believe the returns will start shortly and will serve as a deterrent to potential crossers. However, human rights groups have expressed concerns over the agreement, citing the need for fair asylum processes and humane treatment. Despite this, both nations maintain that the deal is a balanced approach to managing migration and border security. In a bid to keep pace with the growing energy demands of the AI boom, several European countries are initiating a digital transformation of their aging power plants. The continent's traditional energy infrastructure, some of which dates back decades, is being modernized with cutting-edge digital tools and AI technologies to improve efficiency, sustainability, and reliability. The revamp comes amid a surge in energy consumption from data centers powering artificial intelligence and cloud services. Government and private sector players across Europe are now investing in smart grid systems, predictive maintenance software, and real-time data analytics for power generation. Experts believe the shift will not only extend the lifespan of existing plants, but also reduce carbon emissions and support the European Union's green transition. With the global tech industry demanding more power than ever, this AI world makeover marks a crucial step towards future-proofing Europe's energy landscape. That's a wrap on the news, but before we leave, a quick recap of today's stories. Federal government appeals to foreign oil firms as output declines. Deepened stock market soars as Nigeria adds 1.78 trillion naira in value. Ghana raises farmers' pay by 63% as global prices soar. Russia slams Trump's tariff threat on India as illegal coercive. Europe's power plant set for AI-driven digital makeover. Many thanks for watching. Do well to follow us on all our social platforms at SOUQ News Television. I am Omobola Sandra. Thank you for watching.